is audit procedure and not the assessment procedure. That does not mean that there is no assessment at all under the GST. In fact, the assessment what is there under the GST is a self-assessment where the taxpayer is obligated to assess his own tax liability and report the tax liability and the turnovers to the government. There are couple of other provisions relating to assessment as well. One among them is a provisional assessment, which in majority of the cases nobody in this particular provision is not a new to the GST. It was existing even under the earlier law of a central excise or service tax, and it still exists in a, say, customs is not there, but central excise and service tax, yes, it does exist. At the same time, it was not a concept which existed in the state laws. Now, this provisional assessment, in my career of 2 decades in the restwise law, I have not come across any or hardly only one assessee who had gone for this provisional assessment. Otherwise, it's merely there in the statute book. Nobody would be willing to go for that provisional assessment. Beyond that, there's one more provision which deals with the assessment, that is the best judgment assessment. And the best judgment assessment under the GST law has been set out only in 2 circumstances. Circumstances 1 is where some person who is liable to pay tax have not got registered himself, that is a unregistered person's best judgment assessment. One more is a person is registered, but he is not filing his returns. So then he is considered as a non-filer, where they will give a notice in both the cases to asking them to file the returns. If they don't file, those cases will be taken up for an assessment, which is on the best judgment assessment. Leaving these 2 aspects, in all other cases, there is supposed to be an adjudication proceedings. What is this adjudication proceedings as against the assessment? What is the essential difference? In the assessment proceedings, the officer need not start with any pre-obtained information, inquiry, documents, anything. It just can call for information and check the assessment which has happened, and he does the reassessment of an assessment which has already been done by a taxpayer. As against this, the adjudication proceedings is the authority already have within them the certain information, and not only information, further evidence and the quantification also as to the what is the taxes not paid, short paid, excess ITC availed or utilized, or the erroneous refund claim, and in fact sanctioned also. So where in assessment the question is they need not have anything to start, but whereas in adjudication they have to have already have sufficient information that you have done something, and they put across all those evidences on your face and say, see, this is what we feel. Now you tell us what you want to do. So this is adjudication proceedings, and GST law has adopted the adjudication proceedings where in order to demand any tax, they're supposed to give a show cause notice putting out all the allegations evidence is relied upon, what is the grounds on which the proposals are made, which are all the provisions invoked, and what are the proposals. Then an opportunity is supposed to be given to the taxpayer to come out and defend his case. And after considering the what all the allegations put across and the response and the evidences placed before the authority is supposed to come out with his decision or judgment is called adjudication, through which a decision or order would come to be passed. Why did I explain all these things? Majority taxpayers today are getting confused with audit proceedings as an order, letter as a notice, communication as a notice. So it is, all these are technically different. And one more important thing to note is that under the GST law, there is a provision which is section 162 subsection 2, wherein it provides that if any of the officer, there is authority, is acting without authority of law, the taxpayer do not object to that particular notice of the inquiry at that stage and responds to that particular notice or inquiry or communication, whatever it may be. Later on, in the due course of proceedings, the validity of the notice cannot be questioned. So once you have given away your right of objecting the jurisdiction authority at the first threshold, having acted upon, you cannot question it at a later stage, is what is already enacted in the act itself by the parliament. So be careful that technical aspects and all also you're aware of. Now, with this background, I would like to just give you a brief about the structure which is there in the department. The one which is presently I'm talking, the previous, the central officer, state officer. Can just please go back to previous slide, ma? See, the structure in the central taxes would be starting from the higher up, the principal chief commissioner of CGST, then the chief commissioner of central tax, principal chief commissioner of central tax, commissioner of central tax, additional commissioner of central tax, joint commissioner of central tax, deputy commissioner of central tax, assistant commissioner of central tax, and there will be below that, there will be superintendent, inspector, and supporting officers. Now, why did I say this? Because whenever any notice is issued, the act deals with who can issue this notice, who has to do what, under which section, which officer is empowered. There is a circular issued in this regard by CBIC. So when any notice is issued, you may have to check that whether the officer who is issuing is empowered or authorized to issue such notice. Coming to the officers cadre in the state, the commissioner of state taxes, additional commissioner of state taxes, joint commissioner of state taxes, deputy commissioner of state taxes, assistant commissioner of state taxes. Below them will be other officers. Here, commissioner of state tax will be the head of the commercial tax department for the entire state, whereas chief commissioner or a principal chief commissioner in the central taxes, he will be heading only one of these zones within the state. There will be multiple zones within the state. So though the commissioner, I'm talking about a chief commissioner, whereas here I'm talking about a commissioner. Commissioner is heading the entire state, whereas there Chief Commissioner is heading only one zone. And when it comes to the Commissioner or the Principal Commissioner, will be heading only one commissionerate. Below Commissioner in the state, there will be additional Commissioner. Please note, in the GST law, any of the adjudication, that is the show cause notices and adjudication proceedings, which I was explaining, cannot go above additional commissioner or the joint commissioner. Whereas in restwhile central excise or service tax, commissioner was also an adjudicating authority, but under the GST law, no, the authority who will adjudicate is only additional commissioner or joint commissioner. Commissioner will not adjudicate any of the notices. Authorization for search, etc., is again by an officer of a joint commissioner or additional commissioner. So the hierarchy, what has been done, the powers which is designed in the GST law has been synced with the earlier state hierarchy structure, not with the central hierarchy structure which was there earlier. Now, the next point I wanted to highlight to the participants was who can appear before the authorities. Whether anybody can go and appear. The law itself has prescribed who can appear, where in fact section 116(1) talks about that, and there it says if anybody wants to appear before the office of GST or appellate authority or tribunal in connection with any proceedings, he may appear by an authorized representative. But there's an exception to that. The exception is whenever in the proceeding, some examination on oath or affirmation, there's like a statement recording is what we generally say in indirect taxes, deposition of a statement where they will summon a particular person to appear and give a statement. In those cases, only that person to whom that particular summons is issued to come and record a statement is only supposed to go, and authorized representative cannot go and represent that person and appear before them. Next slide, please. Who can be authorized person? Basically, individual is a natural person, is relative, or any person's regular employee, a practicing advocate, a practicing chartered accountant, practicing cost accountant, a company secretary, a retired officer of the commercial tax department of the state government or unitary or of the board, working at least 2 years in the post, not below. Basically, the and authorized GST practitioners. Please note 2 points in this. Point number 1, generally we find a person will be called as group CEO, group CFO, group manager. But actually, if you ask, are you an employee of the present company whom you are representing? On record, he may not be. So, technically speaking, in such a scenario, such person cannot be authorized representative. Only a regular employee can be an authorized, or an advocate or a practicing chartered accountant can be appointed as an authorized representative. At the same time, the appointment as an authorized representative cannot be of a firm of chartered accountants. The authorization should be in the name of a particular chartered accountant or an advocate, and not as a firm who, even including a chartered accountant firm or advocate firm. So it is in the capacity of a practicing chartered accountant, though he may be a partner in any firm, still he can go and accept the authorization, though he will be acting as a partner from the firm perspective, from the GST law perspective. As a practicing chartered accountant, he will represent a client. So when the representation is given, the authorization letter, if any, has to be in the name of, if there are multiple chartered accountants or advocates, all the names should come in authorization. One more aspect to be noted, the power of attorney should it be in a stamp paper? Actually, there is no such requirement under the GST law, or for that matter, in Karnataka, even looking into the Stamp Act. So even a plain sheet of paper, generally like advocates on a green sheet, they will have an authorization. In fact, advocates do affix a stamp, that is a Advocates Association welfare stamp, whereas chartered accountants need not even do that because they are not having any such requirement per se. Okay, so next slide, please. I think this is very important slide when we are looking into the aspect of litigation. I have to highlight the fact that though we are construing GST law, in reality, it is not one statute. It is multiple statutes working in together as in conjunction, appearing to be or presenting it to be a one law. But technically speaking, they are different law. When we are talking about an intrastate supply, both CGST law as well as SGST law has to be operative and will be operating parallelly for those transactions. When we come to a taxpayer who is carrying out both intrastate supply and interstate supply, then all the three statutes, that is CGST, SGST, as well as IGST, are working in tandem together. So in such a scenario, the notices, orders have to make a reference of the corresponding provisions of the corresponding statute or the rules made thereunder to invoke the provisions. Many a times we have seen a notices where the notice will be only talking about either only CGST Act or only SGST Act and ignoring completely IGST Act. But when it comes to the quantification of the taxes, it will have all the three types of taxes, which is technically incorrect. And in fact, it can be questioned. We do not know whether the later the courts are going to uphold or not, but at threshold, it will be improper because there is no demand whatsoever has been raised under the other statute. Similarly, there is a one more provision which is to be noted, is that in the initial stage itself, when the law was being designed and framed, there was a clear mandate which was given to say that the taxpayers will not be subjected to the interaction with multiple authorities. They are supposed to only deal with one authority. In fact, that was the reason why the allocation of the taxpayers were made between the center and state. In that regard, both, if you refer to Central GST Act or the State GST Act, you will find section 6, there is a mention about the debarring the authority of the other side to take up the same matter. In other words, if a central officer have started inquiry, investigation, or a proceedings, a certain type of proceedings on a particular subject matter, on the same subject matter, the state cannot start the proceedings. In addition to this, I will also want to say there are certain proceedings which have to be done by the jurisdictional authorities, like audit, scrutiny of the returns. These are all the activities supposed to be carried out by the authorities to whom that taxpayer is assigned. The other side of the authority to whom it is not been assigned cannot come and carry out the audit. However, they have been given authority to carry out the inspection or a search based on the intelligence, and there's an inquiry investigation. If such inquiry investigation is started by them, on that particular aspect from the beginning of the proceedings till conclusion of that particular proceeding, including passing of the order, should be continued by that particular authority, either a state or center, as the case may be, and the other authority is debarred. Please note, when I said it's a subject matter is not confined to a particular period. It is a issue based. So even if it is a multiple periodical, it has to be dealt by the same authority who would have dealt earlier in the investigation. Subsequently, if somebody wants to pay it in a normal course, they can do it, which can come into an audit proceedings. So that is one aspect which you should know. There is one more aspect in this. If an order is passed by either a central authority or a state authority, even the appeal has to be filed by the same hierarchy. If the order is passed by the state authority, the appeal also should go to the appellate authority in the state. If the order is passed by the authority of the center, the appeal should also lie before the authority of the center. So there cannot be a crisscross or based on the jurisdiction. This is also made very, very clear. In addition to this, I missed out the second bullet point, which is that once an order is being passed, though officer is a state officer, while passing the order, he should also pass an order under both statutes, that's the CGST Act and the SGST Act. And similarly, even if the officer is a state officer, he is supposed to pass order both under CGST and SGST. So again, here we see many a times they miss out passing two parts of the order. They may say only one part of the order. So this aspect we should be well aware of to check out on this. Next, please. I will tell this practically. Many a times we miss out the fundamentals and will be only trying to see what is being told to us. We also consider whatever the officer says is a gospel truth. We don't go to the fundamentals. Please understand, the Constitution of India clearly says no tax shall be levied or collected except by authority of law, which is generally mean even the law made should be having an authority, and the tax, if any, should be collected should be by authority of such law which has been framed. When it comes to collection, procedure should be followed by the proper officer, should be followed correctly. They cannot say no. They cannot harassingly or without authority collect any tax which is not due or which is still not ripened, etc. They cannot collect forcefully. Audit proceedings is merely a verification and giving their report for a further action. They are not the officer who are recovery officers who cannot enforce the collection. There are a number of decisions on that wherein they have said they cannot enforce the recovery mechanism in the process of investigation or, for that matter, audit. Search or inquiry, if it is being carried out, it should be conducted with a proper officer with a proper authorization. Say, for example, they are carrying out an inspection or a search. There's something called a form INS 1, where they're supposed to give the reason why they have coming out and carrying out that particular inspection or search. And also they should have a reason to believe there is something which you have secreted or hidden. Then only they cannot. If whatever is there, prima facie available, cannot be said to be secreted. So I think many a times it will be whatever the inquiry or the investigation search will be actually illegal, improper, incorrect. But the question is whether, as a taxpayer, can I question that? Obviously, yes, legally. Practically, it is depending upon the how you feel your case is, whether you can afford to take panga with the department, panga with the authority, is all the individual calls with the respective taxpayers who shall take the way they want to. They want to be submissive or bold and say, or being firm with politeness, which is always preferable. You have to be firm in what you want to say, but need not be aggressive in telling. You can be polite in telling, but still you can tell what you want to tell and stick to what you want to say and ask them, give you authorization. We feel that you are not authorized. Under which section you have come, whether on what basis you have come, whether if you are doing it, okay, what is that I can do it, whether which section empowers you to do it, whether in accordance with that act. All those things you can discuss and say that, sir, I think that you are not empowered or you are not correctly doing it. You can always ask those questions. But at the same time, please note, if you give all your data, evidences, documents, later on you cannot go back on that. This aspect, you should be very clear. Evidences, even though collected in an illegal manner, but it becomes a valid evidence in the subsequent proceedings. So you have to be very careful of what you give, what you don't want to give. Next slide, Mark. So I think with this background, I will ask Ashika to just run through what are all the different types of notices which will be, which can be issued briefly. Then I will take up how to practically address each of those notices. Ashika, over to you, please.
Yes, sir. As sir explained so beautifully, that if we see under GST, we basically divide into three parts. First part is assessment. Second is audit and inspection. Third is demand and recovery. Like sir said about the assessment. Now, in assessment, what under GST they have done, they have basically covered, means basically they have curved out few things which they are considering under assessment, and they are issuing different notices they have prescribed and a different manner they have prescribed for replying to the same. Now, assessment will run from section 61 to 64, which deals about scrutiny of written, non-filer, non-registration. So as we are seeing over here, violation related. So basically assessment deals with it. If you have not filed your return and you are liable to it, that assessment proceeding says that you just file the return, case closed. For that section, not for overall or GST procedure, but with that section get closed. Like for a purpose of scrutiny of return, when they see any discrepancy, it may be rather in between GSTR 3B versus GSTR 1. Your maybe the outward taxable supply which you have shown in GSTR 1 may be comparatively high what you have shown in GSTR 3B. There can be multiple reasons for it. There might be a clerical error. There might be a credit note impact also, because as we know, in GSTR 3B, we can't report negative figure. Sometimes it might happen your credit note is more than the value on which you are liable to pay tax in a month, which we keep on adjusting in the subsequent month. So this scrutinies of written, this is also one type of assessment where we give our explanation with other supporting documents and explain why there is a discrepancy, and on our explanation, if the officer is satisfied, case get closed over there. If not, then they have the power either to go for audit and inspection or to issue a mere demand notice, show cause notice for it. So this violation related is basically where they will point out you what the irregularity which they have noticed in your GST. It may be non-registration. It may be a cancellation of registration due to non-filing of return. It may be being a composite dealer. You might be collecting tax and paying. Means where a composition is a part of it. Means in between year you opted out, or in between or year you opted in. That they will check. So all this violation, they will point it out, communicate to you through various notices. There are different notices also prescribed. So it's not that when you receive the notice, it's not that simple. You will just go on to reply. You have to also see the first, what's the form number it has been given. If I say you like form GSTR 3A, that is specifically where return has not been filed. So they will issue you in form GSTR 3A. Then you have to also see the section under which it is issued. Like it is for section under 46. This co-linking is very important. Why I am saying is, though by going through that section, if you will see section 46, it says for non-filer. But like in our one of the case, it happened, the notice has been issued under that section for not for non-filing, but for belated filing. But that section does not deals with that belated section. Neither form GSTR 3 is for that purpose. So straight away on that ground, even though there is a non-compliance, even though after your reply, officer might issue in correct section in correct form. But as sir pointed out, it's very important at the beginning only to point out what are the discrepancy or whether the officer have the authority or not. Because if you continue the case, if you continue giving them reply, submitting the document without objecting the same, then that proceeding, even though not as per the section or as per the legality provided, then also it will be deemed as proper proceeding. So we need to be very much careful whenever any note is received. We need to know first what is it purpose for what violation it is. So then only you have to move forward. So violation basically deals with assessment, the way that it is divided under GST. Then second part come with is audit. Now audit in a good and multiple way department has started. Audit is having also two things. First is audit under section 65. Second is inspection under section 67. Now audit and inspection both have different purpose, though it seems like in both the cases officer do the same thing. But 67 with deals with inspection and search is very wider compared to audit. The power under that section is also very much wider because officer has also a power to arrest. So when you receive any notice, you need to also take care of the fact under which section it is not issued, because that will also define the jurisdiction of the officer and power of the officer. So before initiating any audit and all, if you will notice multiple numbers of they have issued ADT 01. That is the first form they issue under audit. And for inspection, they issue notice under inspection. There is no specified form format has been given for inspection. So they will issue you ADT 01, whereby they will be saying for which period they are coming to do your audit, who are the officer appointed for the purpose of audit, and what are the documents they require for the purpose of doing the audit. That is the first step. And with that, they give you 7 days or 15 days time limit to submit it. So whenever you receive notice, don't immediately jump to submission of reply or submission of document. It's better if you do preliminary review or preliminary check at your level. Because once the documents you have given without having the knowledge what the liability would be, it will be very difficult for you to defend it. Because the way the officer move is, whichever thing, either your audited financial statement, your GSTR1 or GSTR3B, whichever show higher figure, they are going to go with it. So in audit, the first thing they will issue you a letter. They will ask you, come submit this document. Now, the first thing before submitting is better you do the preliminary scrutiny of your documents which you are going to submit, so that you are fully aware of the fact. If officer asks you something, you can substantiate or explain. They can ask you anything about the starting from nature of business, about any expense which is shown under any head. Okay, then once you have submitted your documents, they will start scrutinizing it, and on their preliminary scrutiny or going through the document, they are going to issue you a audit observation, which will be basically their points on which they feel you are liable to pay tax on it, and you have to explain it. It may also a case if they feel they may also call upon the person, means they can also issue you a summon asking you to come personally, maybe your director or maybe the finance head or the person who is fully aware of the business, to explain him anything which they feel required. So basically, this is what the procedure followed under audit and investigation. Thereafter, once they have issued you the observation, you submit your reply, which they might accept, they may not. But it's very important whenever you are submitting your reply, just don't submit it like a two-liner. You need to have to properly explain why you are not liable, and you should also substantiate it with the documents or Excel workings. If there is a 1-3B discrepancy, you should properly explain why the discrepancy is there, which month, what error happened, and you should also support it with the respective documents so that when the officer look into it, he has nothing else. He can't question it further. It should be so crystal clear, because at that level only you can complete your audit. Now, why it is important to complete that observation or audit at that level? Because if you know, once the show cause notice is issued, penalty become 100%. Prior to show cause notice, they have given various penalties. So first is section 73, which we say as a non-fraud cases, and another is 74, which is a fraud cases. Most of the time when it will be selected, when they issue notice, they say you fraud case only. But officer also give you an option that if you pay the tax and interest where you feel, yeah, there is a lapse and you are liable to pay, then you can pay the tax and interest. They will not demand penalty by invoking section 73, or they may demand by invoking section 74 also, fraud cases, but their penalty will be 15%. So you need to be very careful at your audit level that what are the observation raised, where are you standing, which is your weak, which is your strong point, and accordingly the management has to take decision on it. Because even though sometimes maybe you feel that strong, but amount involvement also matters. So various factors you have to take into before moving forward or paying the tax or litigating it, keeping the cost in the mind. So generally, this is what happened. They issue you ADT 1 for audit, for inspection, or only notice under section 67. There is no specific form. Then they will issue your audit observation, or in inspection also they will issue your observation. There is no specific format or form for it. After that, you have to submit your reply. For that also, there is no specific. Like we discussed under violation, for assessment, there is everything, there is a specific form. And department has to follow also, you have to also follow. If you will see, some of the officer outside only they have picked. They have pasted for ASMT 10, come and reply in the format of ASMT 11. They have specifically pasted it, and they said, we will not accept if you do not submit in the format prescribed. But though they can't do, but it is advisable, you should reply in the format asked for. Because when department does not follow, we immediately jump and said that you haven't done it. It's not proper, improper order, improper notice you have issued, that should be discarded. Similar way, we should also, from our side also, should comply with it. Now, after audit is completed, they issue ADT 02, which is their final audit report. Basically, they say, now these are the things, these are the observation I raised, these are the reply client has given. Now the final conclusion, whether they accepted or they rejected. On that basis, we move on to another ground, which is show cause notice. If at the audit level, if the officer or investigation level, if the officer does not agree with the submission made by you, then the adjudication proceedings start. So either they can issue a notice under 73 or 74, fraud case and non-fraud case. But the thing is that most of the time you will find it under 74 only. Even in GST regime, there is one more important challenge is there. is like earlier in pre this GST regime, what was the situation? Even if officer have issued me fraud case and I was able to prove that there is no suppression, whole show cause notice would get discarded, been extended period cannot be invoked. But when we come to GST, now they have specifically given under section 75 general determination where they are saying if show cause notice has been issued under 74 and it was afterward held to be non-suppression, then immediately 73 could be done. So instead of 5 years, it will become 1 year. That could be done. That's what have been provided. Instead of getting discarded, it will still continue, but by way of 73 if there is a demand. Then adjudication also involves two more cases. That is like it's pointed in this is 76, where you have collected tax but not paid to the government. It can be happen in case of composition dealer that by mistake they collected tax but not paid. It may be also a situation where there is actually tax payment not made due to non-receive of money, non-realization from the customer. So in that case also, show cause notice can be issued. This is all we are discussing. Now we have come from pre-adjudication to adjudication. Now 52 is for e-commerce operator, where the e-commerce operator has not furnished the details or the returns which was required to furnish. In these situations, in this 4, adjudication proceedings start. When we say adjudication, we are saying show cause notice process start. Means where they issue you DRC 01. In adjudication also, there are for everything there is a specified format, form in which the officer need to issue and in which you need to reply. So they will issue you a first, they will issue you a pre-consultancy notice. Pre-consultancy notice is like an opportunity given it to you before issuance of show cause notice. You come and explain why I should not issue you a show cause notice. But problem over here is that pre-consultancy notice is issued by the officer who has already done your audit or who has already done your assessment. The officer who at the time of audit is also saying you are liable. At the time of pre-consultancy show cause notice also is not changed. So over here, government need to change it jurisdiction, because if the person who has done the audit is issuing you pre-consultancy notice, obviously his view will never change. At audit level, if he is feeling that you are liable, at the show cause notice level, his view will not change. He will issue you a show cause notice and ask you to pay the tax. But the thing is that once the show cause notice is issued, then that then that audit officer don't have the jurisdiction. Now that show cause notice will pass on to the jurisdictional officer based on monetary limits. They have specifically mentioned the amounts on which basis which officer can deal with the show cause notice. Like for below 2 crore, it is your assistant commissioner. And below 5 crore, it's your joint commissioner and additional commissioner. Like sir at the first slide has discussed about the officer, hierarchy of the officer, because that hierarchy is very important, because in that manner only their jurisdiction and their power to issue show cause notice and to adjudicate show cause notice is dependent on it. So all these factors is very important, because any one technical lapse will also, though tax liable, can result in your winning the case if it is you are able to prove it. It's not only every time, it's not only legality, sometimes technical grounds also work in favor. So you need to be very much careful whatever the notice is received, whatever the section invoked, what is the ground, very important. A person cannot be asked to pay a tax without specifying the reason for demanding such tax. We said in our term, we said as it's a non-speaking. So a non-speaking show cause notice or non-speaking order cannot be, and it is not acceptable in any court, because it is regarded as against the principle of natural justice. Because an SSC, if it is not put to the question why he is liable to pay, how he is able to defend the case. So that's are all the factors which need to be taken into consideration before replying to any notices. Maybe it's assessment, scrutiny of written, non-filer, or it's a show cause notice or audit reply. Each and every word, each and every starting from starting point, from the date it start. Because if you will notice that audit observation issue without date, without dean, director, document identification number, they are all very important because they have issued the circulars. It's a department circular that if dean is not mentioned, that notice is invalid. Though officer has power that he can generate dean within 15 days, even after issuance, but he has to specify. You all have to mention that all this in your reply, so that officer also know that you know the law, and he can also, while issuing the observations or any demand, he also know how he should raise the question and how the client should reply to it. So this was the 3: assessment, audit investigation, adjudication level, which is the show cause notice. Starting from show cause notice, it will go from show cause notice, then appeal and all will cover.
Continue. Next slide.
Now, then there's a penalty. These are all penalty section. Section 122, which specify penalty for a, it's read with section 74. So it specifies that where there is a issuance of invoice without movement of goods, or movement of goods without issuance of invoice. Multiple scenarios are covered. Well, if any of this has happened, then obviously for demanding, it's obvious for demanding any tax, interest, or penalty, issuance of show cause notice is must. Without issuing show cause notice, nobody can recover any tax, interest, or penalty from any client or any SSC. Even at audit level, they can't force. This has also been held in High Court and Supreme Court. They have said no one can be pressurized and asked to pay, because at the level of audit, means before issuance of show cause notice, every demand is a proposed demand. It's not confirmed. It is not said that you are liable. There's nothing, because still the order is passed. They are all proposed demand, because you have not accepted. You are of the view that tax, interest, or penalty is not liable. So for even for penalty also, they have to issue show cause notice. 122, as I said, its cases covered under section 74 are mostly covered, and there are specified cases also they have given. 123, penalty for failure to furnish information written. 124, fine for failure to furnish statistics. The commissioner may call upon you to furnish the documents or statistics of your business. 125 is a general penalty, which is like every time, everywhere, officer try to invoke. Suppose if outside your office, you haven't put the board of GST, board where your GST number is quoted, then they will invoke general penalty. Even nowadays, for person who are not filing 9C, they are invoking this penalty. If you are liable, you didn't file, then you are liable to pay under section 125. They are saying 127, only proceeding for penalty. 129 and 130 is basically deals with transition in goods, e-way bill related. Like if goods are under the movement and it has been found that the e-invoice and e-way bill which the transporter was carrying with them, and there is any discrepancy with the good physically available or between the e-invoice or e-way bill, that then the question of section 129 and 130 come into the picture.
Okay.
Sir, over to you.
Next slide. I think next slide I will just take it up. Okay.
Okay.
Thanks, Ashika, for you elaborating on different types of notices on technically referring to the provisions. For the participants, I would like to highlight a couple of points. why we dealt with all these specific sections, not all sections. It is not I wanted to deal with that because in rule 142 specifically it says if a notice is being issued in the above referred sections, then it shall be in form DRC01 electronically through electronic portal. So what I'm just trying to say, when the law was designed, everything was supposed to be happening only through a electronic mode without any physical interaction or physical movement of documents. Unfortunately, even after the period of 5 years, the entire system of GST, especially the litigation management, has not happened. I mean, is not yet automated. It is happening partially, not fully. And I think the government has ignored focusing on that to happen, and it's taking its own sweet time. In some of the jurisdiction, it gets uploaded. Some of the jurisdiction, it doesn't get uploaded. In some places, same office, for few tax cases they upload, few cases they don't upload. Whenever it is not uploaded, you go and ask, they say you have to file physically. When it is uploaded, but you go physically file, they say, no, in these cases, it's already there in the portal, why you have to file only online? So there is no uniformity. Why I am highlighting and stressing upon that is, there is a very good chance that a notice or an order would have been served to you quite some time back, which you have not noticed. And what is a corrective action or a appeal mechanism which you are supposed to have been resorted by you would have not been undertaken, which you may lose the right of appeal itself if the time period has lapsed. Having said that, though there is a provision which deals with what are all the modes of communication through which the notices, communication, or orders should be given, there is a subsection 2 of that section which talks about when a notice or order is deemed to have been served. Somebody carefully compares subsection 1 with subsection 2. They can clearly note this email communication and a portal communication is not specifically included in subsection 2. So in all those scenarios, you can always take that physical copy serving is very, very important on you. Unless you have got a physical copy, you cannot count the time limit. Hence, you still have a time to file your appeals. Why I'm saying that in the past, many cases have come where the A70 13 would have been issued and the portal orders would have been passed, all those things. So if somebody has missed out that, please take this as an argument and you can always go and resort to appellate mechanism, or at least file the return within 30 days of that and say that we have filed within 30 days of the communication of that particular order. Now we have listed out some of the common issues which are generally being faced by the real estate sector. Shweta madam, hopefully I think we'll take 10 to 15 minutes more. That should be fine,
Sure,
right?
Yeah, sure, sir.
Okay. When it comes to the difference between GSTR 2A and 3B, it is a common phenomena in all the taxpayers. Maybe less than 5% of the total taxpayers, there may be a scenario where 2A would be matching 3B, unless they have decided to leave out the credits which they have actually purchased, but not decided not to take credit because it has not come into it. There was a lacuna in the mechanism. Initially, before this GSTR 3B concept was there, where the GSTR 2 and 3 was designed, the system itself was taking care of everything. But when they decided to suspend GSTR 3 and introduce 3B, there was no corresponding mechanism to patch up the other part of the compliance to come to the taxpayer to ensure that the other fellow has paid taxes and has reported the liability, etc., etc. Now, in the absence of the mechanism, can the department put a blame on us and penalize us for the fault of somebody else? Technically, as well as logically, as well as judicially, as well as common sense, it anybody can say that this cannot be a basis for the department to deny us the input tax credit. However, having said so, at the same breath, I will also caution all of you that there is section 155 of the CGST Act, which says any person who is claiming input tax credit, it is a burden upon him to prove the eligibility of credit. So, which means though there may be a default from the supplier, you can tell that, but what is required to be established for you to take a input tax credit, that responsibility always lies on you. One of the condition which is going to be hampering our burden of proof concept to be established is the supplier should have paid taxes. So how do we ensure? There's no mechanism. So technically speaking, it cannot be established. As the last law stand today, we are supposed to ensure that he has paid tax. How and all is not a responsibility of law, but practically it is not possible. In fact, the judiciary has come out in the arrest while laws clearly saying that when something cannot be happen, I mean, is possible to happen, you cannot insist that to happen. So, in such a scenario, there's a little difference between difficulty and impossibility. Here is a situation where it is more like an impossibility, not merely a difficulty. So, in that scenario, the judicial forums in the days to come will come out and make your relaxation as per this concept. Till then, the dispute and debate is going to be continuing. At the same time, I would also like to emphasize the grounds which they are trying to say is the supplier has not paid tax. In that regard, I would want to highlight you merely by the fact that it is not appearing in 2A doesn't mean that he has not paid tax. He might have paid tax but wrongly disclosed in B2C, or he has uploaded the wrong GST number. Now the time limit has lapsed, or he has closed down the business without filing a return. He is died before filing a return. There are various reasons. So merely by the fact that it has not come into a cannot be basis to say that the credit, I mean, the tax has not been paid by the supplier. So these are some things which you need to understand. And for the one more thing, recently the amendment is brought out in January 2022 that the credit should appear in your portal to avail ITC. So therefore, the aspect of 2A can be only statutorily said to be there in the statute book only from January 22, not earlier. On that basis, these notices can be defended. We also come across many of the places, the contractors, the government contracts especially, though it is indirectly related to real estate, since it's also related to construction related, I felt it appropriate to also bring out here, and also it will be an example in a similar scenarios to compare. The government, while they making a TDS, tax deducted source, would have deducted and filed the returns. What the department is doing, they are collecting the information from those or the returns filed by them and comparing with the returns filed by the taxpayer with that GST number, and they're seeing there's a lot of difference between the what is reported by the TDS tax returning authority vis-a-vis the what you're reported. So please explain. What is happening is many of the government departments, irrespective of the fact whether it's taxable, not taxable, or deducting tax and reporting. Anyhow, taxpayers are thinking that it's going to come and sit in the cash ledger. So why should I bother? I will claim a refund. So there may be difference for various reasons. And many a times the contract would have happened earlier, the payment will be coming now, or my invoice timing, payment timing may not be matching. So may there various reasons, but you be careful that you need to reconcile and keep. Similarly, the difference between GSTR 1 and 3B, ideally this should not be different. If there's a difference, you should have a valid reason and with the supporting documents. Nowadays, in the real estate sector, one of the important aspects every officers or the authorities looking out is a exempted turnover. Majority of the portion in a real estate sector that is who's dealing with the customers would be exempted, either partially or fully. At the same time, there would have been an input tax availment taken by the that whatever the service providers who in the real estate sector. The people who are in the residential construction sector would they are not all eligible for the input tax rate for the project after 2019, or people who are not opted for to continue the old scheme. In such a scenario, they are not eligible for the credit, but there may be a certain portion of the turnover, other activities where they may be liable to pay tax. So in all those scenarios, they may be entitled for some amount of input tax credit, or they may not be entitled for any credit at all. Many a times it has happened that either they have simply availed the credit and utilized the credit. In fact, I am presently handling a case which is having a crores of rupees impact. They were doing essentially exemption. I mean, basically the construction of a complex. They thought that they're eligible to take a credit and pay 18%, though they did not fit into ongoing project. They continued to avail a credit, and when now the department has come out and said that you're liable to reverse the entire credit. One is the reversing in credit is fine. The second aspect which is coming out is whatever the tax collected at the 12% is asked to be paid in cash over and above this reversal. So there's a double hit which you cannot utilize the credit and you end up paying the entire amount collected as a tax bill to the government. So there's going to be a double impact. Somebody has to be whoever is doing the real estate sector has to be doubly sure and clear about their ineligibility and also the reversal, keeping in mind Rule 42. I repeat, Rule 42 and Rule 43 in respect of capital goods, whether those compliances are being followed as is applicable to them. Otherwise, of which they end up paying a lot. In fact, the added with the interest, it may come to a situation where their entire capital itself may be eroded, where they may lose out, they may become bankrupt, their solvency itself may come into question, their going concern concept itself may go out. The one more aspect which I thought would be relevant and important, which the notices are coming, are with regard to this payments not made to the vendors beyond 180 days. In fact, technically, there is an argument possible based on all these latest amendments. This 180 days condition is applicable only from the latest 1st October 22. Earlier, this 180 days condition was effectively not applicable because the relevant provisions are omitted and the only new provision introduced now. So can be a line of argument that can only defend because anyhow, by the time the department comes up, you'd already paid a vendor. Only the question will be on an interest. Since there is no interest on interest, you can try to contest based on all this technical ground. And if so happens that there is some scheme which they're talking about, if it comes up, you will be given relaxation from the payment of interest under the scheme if they give. You may be given a waiver of that interest as well. Try to keep on continuing with that. One more issue which we have seen in the real estate sector is the time of supply. Majority of the cases, the companies do adopt the concept of paying taxes only on receipt. It is not when we talk about them, they say, so this is an industry practice. Not necessarily. Law says whenever you are eligible to receive the consideration, or if it is linked to some event, including the slab or the time period, once that happens, you're liable to declare that liability and pay taxes. If you're not, unless you're carrying the interest liability. In fact, I've seen in the past before all this credit restriction came, they were having a lot of credit in their books, but still they were adopting this receipt basis things. There was no necessity when they, since they are paid only through utilizing credit. So they need to look at it. If they really want to go with the cash system, they need to reorganize their terms of the arrangement agreement with the time of supply. One more notices which are getting issued is non-payment of tax on landowners' share. In fact, the government is very, very clear saying that in the case of a joint development arrangement with the area sharing, the developer is liable to pay tax on the construction which is carried out by the developer to the landowner, and they're liable to pay tax. But practically many of the developers have not paid. Even if they want to pay, there's a dispute who has to bear it. So all these issues are cropping up and getting piled up. So if that is there, if somebody wants to litigate it, please look at the provisions under the Immovable Property Act, the concept of exchange, and there is a fundamental question whether the GST can be levied on a transaction of a conveyance of an immovable property, because immovable property, what is subject matter of a GST is said to be from the beginning is only on a goods and services, where the meaning of a goods and services can go beyond the general meaning of a goods and services and include immovable property is a question of debate which has to get decided by apex court. That too may not be in a smaller constitution benches. It may be a larger constitution of, benches constitution only it may get decided. Next comes to RCM liability. Many a times the builders, developers would maybe charging 5% output tax, but they would have missed out the point of maintaining 80% of their procurements only from a registered supplier. I think that particular violation may again cause a lot of RCM liability on them. So that is a cost, and delay in that would also cause unnecessary liability of interest. Unlike other sectors where they can take an argument, it was merely a revenue neutral, because if I had paid out, I would taken a credit, or it's merely contra entry in the return. For the real estate sector, it may not be so easy to say so, for the reason because the real estate sector are not eligible for input tax credit. Similarly, when the developers or the builders, when they're computing their tax liability on the collection from the customers, some of them are excluding this water connection deposit, electricity connection deposit, club membership, deposits. Deposits are no doubt needs to be included, provided it has to get transferred in the name and account of the buyer to somebody else, and you are merely a trustee of that particular amount. If it is a cost, if it is going to be your income, it's a part of your revenue, then please note you may have to include that. I have also seen another extreme. On the basic value and all, they're charging 5%, but they're charging 18% on all these other things. So that again, in the going by the concept of the composite supply, in my opinion, that is also incorrect. Why I have brought out this issue, in fact, I have got so many other points to practically deal with how to handle the notices. Because of the capacity of the time, I don't think I'll be able to talk about all those aspects. Maybe in the upcoming sessions, we'll go in detail as to practically give you a lot of tips as to what you should see in the notice, how you should see, how you have to prepare a replay, what you should replay, what you have to be silent on. Even though you should observe silence in certain circumstances to save yourself, all those aspects we can take up in the upcoming sessions for the benefit of the members. Shweta madam, over to you.
Okay, sir. Sir, thank you so much for explaining our audience about the complexity of the notices of the GST, under GST for real estate sector and how to handle those notices. So I think you have given a detailed explanation to our audience, and thank you so much for your precious time. Thank you, Ashika ma'am, for explaining about today's session. So now I would like to introduce Mr. Joy Varghese. He is the head of UPAZA, the technology for real estate sector. I request Mr. Joe to take over the session.
Hello, very happy evening. Thank you, Shweta, for this wonderful opportunity to be part of this session. Rajesh sir had taken a very comprehensive and a very lengthy session, so I'll not take very long, pretty long time, but quickly in a gist way, I will explain about UPAZA, what UPAZA is doing, and how it will support the builder. Just share the screen. Is it visible?
Yes, sir, it's visible.
All right. Now let's first understand why do we require a technology for a real estate. See, one of the example which we have it is, one of the biggest pain which a builder goes through is while handing over the project. One small information or a small documentation, if it is missing, it's a very painful time for the builder. So it's very important. The builder should be organized, and all the project information and everything should be kept in order so that the handover can be done in a pretty decent manner. Now, why we should have a technology? Technology, every company has 4 R's. Let us understand what is this 4 R's. The first R is reputation. Reputation plays a very biggest asset for the company. If you see, let's say, if the customer or if a builder gives a small an invoice without proper caption or anything, it affects the reputation. So it's very important. A company should have gelled up with a proper technology. Second thing is result. If you cannot give a result at quick succession, it will be another biggest impact. It will help to delay in giving responses, which in turn get into customer complaint and satisfaction. So lots of problem will come. So result plays a very important role. The third part is reach. How we can reach the customer? Let's say by SMS, by email. If you have properly integrated your company's system, it could be very easy and it is very impactful for the customer. So technology plays a very big role. The next part is repeat. See, when this particular technology, when it has been integrated and the brand name it is repetitively seen in the digital media and everywhere, then it increases the brand value of it. So that's why technology plays a very important role. Now, what UPAZA does is UPAZA builds a digital asset for the builders. So let us understand what is the digital asset which we are building for the customer. First, digital asset is, we give a complete project information, very handy. In a click, you will get all the project information. So it's very, that's one of the biggest digital asset which we are having. We are also giving online CRM, a CRM where you can enter all the customer detail and information. We are giving RERA compliance. We are collaborating with all the professional people, like let's say an architect, an engineer, a chartered accountant, as well as vendors, everything. And LOT management, a complete set of an LOT management we are doing end to end, the sales, the demand, the invoice, everything. So this is the digital asset we will help to give the customer, and which will in turn I'll give you in I'll explain you how it would help, or what are the advantages of the technology because of the digital asset. As I told you, it gives an enhanced collaboration with all the stakeholders. I'll repeat, all the professions as well as the vendors. It will help you to get increase the productivity. Uh, uh, the productivity plays a very important role out here. So every builder wants it, and with respect, with the help of getting automated, the productivity will definitely get increased. You can meet the deadline, as we have seen. When every builder has to file RERA. Now, if the deadline has not been met, it raised to penalty and problem, and which includes losses and time. So deadline plays a very important role. So we can help in doing that. We can help in compliances. We can help in forecast financial outlay. That in a click wise you can get it. Otherwise, if you look into the ledger, if you try to get the financial forecast, it will take lots of your time. But out here, Opasa helps in a click of it, and you will get all the opportunity. Uh, Complete. Next is a complete man. It will help you to manage sales process. It comes from the I mean to say, the leads which you get it from the digital. You will get you can help to download it, and also follow up it, and also record it in cloud. And since it is a SaaS model, you can review it, and which will help to increase the productivity, as well as also reduce the duplicacy as well. So that's how we can help in sales process. We can give a timely project updates to the customer. What we can do is, you can take a site, click photograph and upload here, and customer can view it. Customer don't need to visit the location. The next is, all historical customer communication is recorded out here. So there is no duplication. So what happens is, if a customer comes, we will know that what was the last information which was being communicated to us. So everything has been recorded. Uh, the another and the final information it does, it helps the promoters in overseeing and controlling their project remotely. Now, since it is in a SaaS model, it has a dashboard. You can get all the project information at one page, at one click. How amazing it is, right? So this is a wow factor for your company and for your customer. And we Opasa can really change your complete business process and automate it. So for any builders who are not organized, I believe it's good to recommend, and we are Opasa to here to help you out. And you can take down my mobile number, and just give me a call, or go to the link which is mentioned below. Just book our calendar for getting a demo. We'll be happy to serve. With this small presentation, I would like to end with respect to the UPASA. Thank you so much, and Shweta.
Sure. Thank you, sir, for explaining about such a wonderful software. So, friends, if you are a real estate developer and if you are a promoter, so this is an ultimate software for managing your end-to-end real estate business. You can get a free demo, or you can call Mr. Joy, or you can call us also. We will arrange your free demo with UPASA. Okay, thank you, sir. Thank you, Rajesh, sir, and thank you, Ashika, ma'am, for today's wonderful session. As of now, I thank you all of my participants for taking out the time for today's session. And like as of now, we have to end it up. We'll meet next month with the next topic, and we'll intimate you about what will be the topic and the time and date of the session. Till then, please take care and have a nice evening. Bye. Have a nice day.
Thank you.